Welcome to the ChargePoint podcast, brought to you by Flexecharge, your gateway to the future of EV charging. In each episode, we dive deep into the world of EV infrastructure, offering insights and perspectives from industry leaders, innovators, and the people at the forefront of deploying charging solutions and networks. Join us to explore the exciting developments that are accelerating our world towards sustainable mobility.
Welcome to a new episode of the ChargePoint podcast, where we explore the stories and strategies behind the energy transition. My name is Christophe, and I'm of Flexecharge. This episode is close to my heart, not only because I had the chance to interview three brilliant investors shaping the future of energy and e-mobility, but also because two of them, Vireo Ventures and Greencode Ventures, have recently renewed their commitment to Flexecharge. Their participation in our latest funding round, which brings our total to €5 million, is more than capital. It's a strong signal that what we're building in local energy intelligence and flexibility management is resonating where it matters most. So I sat down with Thomas Labryga from Vireo Ventures, Terhi Vapola from Greencode Ventures, and Laurits Sørensen from Nordic Alpha Partners, who, by the way, also back Spirii, one of the fastest growing charge point management systems in the industry. Safe to say, he knows the space inside and out. We explored the big themes. What gets them excited right now at the intersection of energy and mobility? How do they separate signal from noise in such a fast-evolving market? And what are the non-negotiables when it comes to investing in an early-stage team? I also asked more candid, founder-focused questions. What really makes a team investable beyond the pitch deck? And how do expectations change once the money is wired and it's time to deliver? You'll hear three unique perspectives, from the thesis-driven precision of early-stage VCs to the operational intensity of a growth investor like Nordic Alpha Partners. Whether you are a CPO grappling with grid constraints, a founder seeking capital, or someone passionate about the EV ecosystem, this episode is for you. Let's get started. And welcome to the second guest on this special episode with VCs in the e-mobility and energy industry. Thank you for joining us, Thomas Labryga from Vireo Ventures.
Hi, everybody, and thanks for having me. Good to see you.
Thanks for taking the time, and good to see you, Thomas. So Vireo is, again, a disclaimer to start with, is an historical investor in Flexecharge. But let's start with the broader perspective and start with you, please. As always with my guests, can you give us your backstory, your origin story that led you to your position today?
Yes, of course. So I'm Thomas, one of the partners at Vireo Ventures. I actually spent my whole career in the energy industry in various roles, starting as a management consultant and then actually moving to the investment stage, if you like, to investment role, being first at a corporate venture capital firm at RWE/Innogy before, investing there since 10 years, and then started Vireo Ventures in 2020. And my focus is very much on energy tech deals. This is what I do for quite a while. And this is also what we do at Vireo Ventures. So Vireo Ventures is an early stage energy tech and mobility tech venture capital firm. We are completely independent, investing across Europe. Have very strong LPs from a family office space, financial space, institutional space, but also from the energy space. So, and we are looking for startups in the pre-seed, seed, and Series A stage. And actually, Flexecharge was a perfect fit because it's mobility and energy in one firm, if you like.
That's right. Any other interesting companies from your portfolio you'd like to give a kudos to or share?
I think what is interesting is actually to also look to companies which may fit actually or have some synergies with Flexecharge or can work together. There's like Incentive, for example, as a flexibility management company to connect actually vertical industries and businesses to the energy world, if you like. We have companies who are dealing with PPAs. We have companies who are actually looking into battery technology, intelligence topics. So I don't want to point out some more, but I think that Flexecharge and our portfolio is really synergetic. Yeah.
Yeah. Any other portfolio company you'd like to mention here to the audience that they should check out?
Yeah, I think what is interesting actually, Atman raised quite a significant round just recently with certification of decarbonized, so to say, fuels, being it hydrogen, e-fuels, or whatever that could also fit to the mobility space, scaling quite fast. And another company what might be interesting is indeed about energy from the UK. They actually do a software for battery intelligence, which are also deployed actually in EVs, for example, to have a best battery infrastructure in place for the case at hand, so to say, on the best infrastructure.
Yeah. Interesting. Great. I'm sure you could go on. So if you look at as a seed early stage investor, what are the signals you're looking at? What are the important things you're looking into to decide to make an investment?
Yeah, so because we are a very focused venture capital firm, we are always looking, obviously, to fit to our thesis. And our thesis is actually decarbonization via electrification, or the business models which are coming out of it. And another big thesis from us is actually that you have the energy industry, the utility world, so to say, the electrons world, but you have the different use cases. And we very much believe that interesting business opportunity arises at the intersection of both, which is also the case here in Flexecharge. So this is like from a topic perspective, we are looking at energy, mobility, and property technology mainly, as well as industrial topics and the connection to the energy world. But when we look at the investment decision, the team is the most important piece, because we are an early stage investors. We really need to believe that this is the right team to execute on their vision, which fits to our thesis as well. And then the third thing is the business model actually working? So we are very much in favor of opportunities which have some revenue traction, being it as a POC or real business, to actually show that somebody is willing to pay money for such a solution, but also to see if actually the unit economics work out. So to summarize, team, business model, and fit to our thesis.
Yeah, very clear. Thank you. And how's the mood right now on the on the VC front in the intersection of those industry where you are? Is it difficult? Do you get a lot of pitches? Are you saying a lot of no, or are you looking for cases? What's the mood?
Yeah, so our mood is very optimistic, of course. We are still building up our portfolio. We have now 16 companies in our portfolio. It will be about 30. So happy to look at any new opportunity which fits our criteria. We see good deal flow, but it could be actually more, especially in the energy tech space and mobility tech space. I think we are looking very much for real new solutions and not like recycling of, so to say, old topics, if you like. So if you are a founder and have a very novel idea, please come to us. In general, the sentiment, I think it's still not where it used to be. So we see still quite some hesitations in the market in general to invest in the venture space. But as mentioned, that's not currently not our issue, as our fund is almost fully closed, and we have enough firepower to deploy for the next years.
Yeah, interesting. Yeah, thank you for that. So maybe going a bit back in the historical steps to invest. So what back then triggered you to invest in Flexecharge in the first round back in the end of 23?
Yeah, so first of all, like from a business perspective and also talking about the thesis I mentioned, I think Flexecharge was a perfect fit because it's basically connecting the electric vehicle world, if you like, with the energy world. So we saw really this market gap there to address the need for load management for CPOs. But what was interesting, I think the other one was actually that although it was an early stage company at the time, Flexecharge managed to develop a technology, a product which really works, which they have already deployed in real life scenarios, and not only on a POC level, but really being utilized. I think so they had a technology edge in our perspective. And last but not least, of course, the mix of a team and the plan, what they had, how to evolve the company, how to develop the company was very intriguing. And we took the bet. It was quite a bet. I'm happy to elaborate next a little bit on that, but it worked out so far, and we are very happy about that.
Yeah. Yeah, so let's come back a bit, straight into this a bit, and maybe talk about this 1.5 years later. What makes you, go in again and continue to invest as a proof of confidence? So, what are what kind of achievements have been looking, or do you generally look for before reinvesting?
Yes. So I think one of the main things which happened actually quite soon after our initial investment, and what was just amazing, to be honest, is that the founder team really came through with developing the company, developing the organization from a very technological driven team and a very technological driven, so to say, market presence to quite a different and so to say sexy approach, if you like, in terms of organizational development. They scaled the company, they changed completely the look and feel. I think you have had quite some influence on that, and this is something what we really like to see. So we have been really impressed about the organizational development. What is great, but that's obviously not enough to make a reinvestment decision. But what we also saw actually was traction, right? That's which just went great. Over 20 CPO clients, big names with it. A lot of connected charging points. So I think that was the most important piece. And also the capability of the team then, next to just show the organization development, to manage as a company. So that
makes sense. Makes sense. Yeah. And how much does it influence you, of course, to look at what the other investors are doing? So, Greencode Venture, did they also commit before you? Are you looking a bit at each other, or were you also looking at, who is leading the next round to see if you want to be part of it? How much does that play a part in your decision?
All of that. So first of all, it's super important that the shareholders, which are already there, have a productive cooperation mode. Yeah, so that's important. And you mentioned Greencode, which we cooperate quite strongly in that case. It worked very well in the advisory board. So I think a positive reinforcement is important, also to have like a positive view on the whole future of the company. But of course, it's also important what kind of new investors are getting in, especially if we do the reinvestment decision, because it's also influenced the trajectory of a company to some extent, right?
For sure. Yeah. For sure. Absolutely. Yeah. Great. Let's see. Yeah. So maybe saying this. So as we, as Flexecharge welcomes new strategic investors, so what synergies are you most excited about seeing unfold in the new constellation of investors?
Yes, so I think in this particular, so to say, syndicate, we know them quite well. First of all, I'm really excited to work with them, because I really appreciate the persons behind, so to say, the names, and who will manage this portfolio. So I have strong belief that they will have a positive influence in the board and also in shaping the direction of the company. And the other one is actually, both of them are corporate venture capital units with very strong and interesting players behind them. So, we are talking about the biggest CPOs in Europe. And I also hope that this will have some market signal on the one hand, but on the other hand, also help Flexecharge to develop products which are potentially even closer to the needs of their clients, and which they can basically scale then with the new investors, but also in the general market, of course.
Yeah. No, very clear. Yeah. Good. So if we just round off a bit on the perspective, so in your view, what will define category leadership in this EV charging space / energy in the next 5 years? What are the defining elements?
Yes. So first of all, I think to be a category leader, you have to have a certain scale, right? And to have a certain scale, you can only achieve, I think, as a European company with a cross-European business. And this is where Flexecharge is already, I think, excel in a very good position, because they have one of the few technological solutions or business model solutions, which I at least know, which you can scale actually across Europe without being too depending on local regulations and market setups. I think that's that's an extremely great advantage of Flexecharge, that they can actually scale their product across Europe. So I think this is the first point. The second point is, I think a category leader in that space needs to provide a solution for their customers which they do not want to, so to say, build by themselves, because they define it as a value pool they want to grab, right? Because otherwise you cannot get the first one, that you have enough scale, enough customers to be a category leader. And I think with a solution of connecting, so to say, the CPOs to the grid, to provide load management services across different countries where the customers are as well, I think this is something which is an offer which is compelling to the customers. So I think, yes, the category leader needs to be in this space. And third, you have to be able to work across different hardware platforms and setups. So this interoperability, sorry for that, which Flexecharge is offering, is super important, and one of the keys actually to become a category leader, because otherwise you're stuck with one hardware stack, if you like, and then it's also hard to actually scale internationally and get enough scale as a company. Yeah. So yes, so I think, and the last one, perhaps just to mention that one, is also to enable your clients to be more profitable, to enable new business models, to get new revenue streams, like for example from load management, or even at some point to vehicle to grid and so on and so forth.
Absolutely, yeah. Good. Yeah. Any closing? I was personally, I've been also looking into this direction a couple of times in my career, into the VC and investment manager role. So maybe do you have a couple of advice if there are any professionals out there who would like to join a VC? Yeah. What kind of skills are you looking for investment managers to join a Vireo venture, for example?
Yeah, so I think what is important is, because there are certain tracks how usually people end up in venture capital. The one is with classical, coming from, investment banking, consulting. That's one, but then it's more easier, I think, to join a growth stage company or so, where the skills are even more important than in our setup. In our setup, it's more about being passionate about the space, being potential. I think it's easier if you specialize to some extent, because then you have a more clear value proposition to a certain group of funds, so to say. Like for in our case, energy. In other cases, it could be B2B SaaS or whatever you like. Mm-hmm. And the last one is, if you are potentially at a later stage of your career, just start to invest, to get the experience. It's and do some smaller angel tickets. Show that you can actually manage an investment process, that you can take the risk, and that you put your money where your mouth is. Just get started, and then the other things develop out of it. It's hard, I think, to just join a VC fund in the current environment by application.
Yeah. Roger that. Thank you very much, Thomas. And thank you for taking the time today to be on the ChargePoint podcast. And we'll wishing you a great afternoon. Thank you.
Thanks a lot, and I wish you the same. See you soon. Bye-bye.
See you. And moving on to the next conversation in today's episode about investment in the energy tech and mobility space with Terhi from Greencode Ventures. Welcome, Terhi.
Thank you for having me.
All right. As always, let's start with an introduction. So can you please introduce yourself and your backstories to our audience that led you to the position where you are today?
Sure. So electrical engineer by training. So this is kind of my area of expertise from there. When I was still studying, I got a chance to work in a company called Bach, which ended up being the number one clean tech unicorn in Finland. So kind of seeing the founders at work got me inspired into this field where I'm still today. The role model was, though, that they were all super experienced, like world-class experts in their respective fields. So I thought that if I want to do something what they've done, I need to build that expertise somewhere. So I joined Nokia, and then got the chance to also see from that perspective what the good looks like. And lots of experience later, then I founded my company, became the founder CEO, and through that journey, I kind of started doing my own angel investing. So thinking that maybe I could share some of the learnings I've had. So I didn't really think that I would become an investor. I was more thinking that experience itself, just that the others could do it faster and better. And essentially then I kind of realized that actually I like this. This is actually quite nice, being on this kind of role. So I kind of gradually became a professional investor. Then I've been heading few funds in different fields, and then that kind of led me to get to know my co-founders, and then we founded Greencode Ventures to focus on green transition.
Great. Yeah, we love entrepreneur stories. Yeah. So how did you decide to take the jump to create your own venture?
I guess I've always felt that I'm entrepreneurial, so wanted to create something, so build something. So we are kind of startup ourselves, but in a different field. And then I guess it quite often goes to the people. So being able to work with the co-founders I have. So I thought that that's once in a life opportunity. If I don't jump and take the chance, I'll work ready forever. And here we are.
Yeah. And how tough was it to build your first fund?
This market is probably, but we knew it in advance. So then we always keep on saying we knew that we picked the most difficult time probably ever, build up a new VC fund. But then nevertheless, being focused, being diligent, and of course being a substance matter expert in the area where we are building for helps a lot.
Absolutely. Sounds good, yeah. So if you were to speak a bit about Greencode Ventures' vision of the industry and your portfolio, tell us a bit more about, your VC shop.
So we focus on pan-European early-stage green transition startups which are working on the transformational technologies using digital tools to address the problems of the green transition. So it's a quite specific lens what we are looking at companies who have a capability to not only create economic impact but also environmental impact at the same go, and also bring that into market as quickly as possible. So capital light, fast to scale, because we believe that it's super important that we focus on those things what you can do now. And also from the VC perspective, that makes total sense, building up those cases which can grow into becoming fast growing, hopefully unicorns in this ecosystem.
Absolutely, yeah. And so I guess you're receiving pitches now and then. So how do you evaluate the pitch that you receive and decide or reject the opportunity to invest?
So the first question is whether they are the fit. So as I said, we are a specialist fund. So we have a certain focus area, but also a lens. We are looking at the green transition topics. So first question obviously is that whether we are the fit or they are the fit to our thesis. And then if not, then also we know a lot of other people. We can also hopefully help finding somebody who is a better fit. Then after, if we consider that is in our focus, and where we want to invest in, then it's basically three things we normally want to look at. So we are VC firm. So VC is a particular type of business models what we are looking for. So there are great companies which could be good SME companies, but that's frankly not the VC model. VC model is looking for companies which can potentially become category leaders in the global scale. So then is the market big enough? Can they be able to have a business model which grows that way? And then also, what's the uniqueness about the tech? So is there a sustainable competitive advantage or moat around that area what they're looking at?
Of course.
Those all matter. But at the end, also, it comes very much into the people. So looking at the capabilities of the founders, because it's super hard to build. Even if you have the right thing, right problem, right solution, you can still easily fail, and many people do. So do you have that kind of interesting combination of being able to see what others don't see yet, and that visionary capability or strategic capability, if you may, and then at the same time super, super quick in executing and good at executing, kind of getting things done. Because most of the times people are either or, but that combination needs to be in the founder team, and they need to be good at both. So that, of course, is, as we VCs quite often say, it's all about people. So that's what we are looking for. And then we also like, even though we say early stage, but we like some traction. So seeing something which proves that even though it sounds logical, that there are actually some real customers who are willing to pay, and seeing that traction, and of course kind of capabilities or early identifiers that you actually can be able to scale it fast.
Absolutely. Thank you. Very clear. Maybe then there's a question. Let's say, so what are the most important signals that you look for in the scale-up phase of an energy tech startup?
It starts to go into the numbers. The more you grow, the more clear it is to everybody. So I think early stage, you need to still have that kind of capability to see what's potential or what's possible, and then build your thesis around it. But the further you go, the less you have of that, the more you have of show me the real thing, show me the tech which works, show me the product market fit, show me the ARR growth, the numbers. So more of that, of course, comes into the play. So if it is such a great thing, then you also need to prove and be very diligent on cadences of the sales and go to market, and which are the beachheads to win and how you win them. How do you turn the pilots into commercial? So going into, and how do you replicate that in multiple markets? So all of those start to become, of course, the core to show that you have and you prove to be able to grow the company. Yeah.
Oh yes, ARRs, annual recurring revenue. Yeah, absolutely. The three most important letters, I guess, for many people here. Yeah, great. So let's maybe have a look a little at, so to speak, the relationship with Flexecharge. So tell us a bit about your original investment decision. What was the thesis back then, or how did Flexecharge validate your checklist, so to speak?
Yeah. So we've been looking at this space for quite a long time, invested in this space, and also we have founders who have been working on this space quite a long time. So we know the potential of this area and the transformational, what are the market needs, first of all, but also the transformational capability to bring those digital tools for the benefit. So many people don't realize how difficult it is from the network side to bring the energy into the EVs, especially when you start to have lots of so when the EV takeoff is coming more strong, so that the capability of the network to provide enough and sufficient amount of power at the right time in the right place is actually not that trivial in practice. And looking at those solutions related to load and energy management, of course, were super interesting, and especially the fact that Flexecharge was looking at it in the interconnection of the you could say e-mobility and the energy. So not just working on the device side or behind the meter, and not just working on the grid, but actually the interconnection point of those two, which is the key. And that of course what we saw when looking at the solution and the market, and then of course going into the team, so the founders. So the technical capabilities from like earlier foundership, so serial entrepreneurship, as well as combined with the access to customers and sales capabilities. So kind of having those corners covered by the team was of course there, and of course the early traction, which was already visible from the customers.
Yeah. Absolutely, yeah. And how has the market or your perception of the opportunity evolved since that first check back in late 23, and now to confirm your investment and double down in this new round?
What I think is really interesting to see is going towards the thesis of the demand response and being able to use the capabilities of the charging networks and public networks in that energy market. So the capabilities what Flexecharge has now proven that can be done, so that you can be able to lower the load and do it in a smart way, which is, as far as I know, the only company in the world who can be able to do that. And from that perspective, providing the customers not only their capability to charge on the energy, but also be able to participate in the energy market as a whole, and bring in more revenue streams is, of course, something which I think is very, very unique. And now in the point where it's proven to work, and then of course being able to support the customers to go forward in that.
Yeah. Have there been other aspects that have evolved positively, which have convinced you to continue to invest?
So I think also the development of what happens in the market, the early indications on the customer, like seeing that those solutions which are being provided are addressing the actual pressing need of the specific customers. So of course that development, I think the company is now in the intersection point. We always keep on talking about the hockey sticks, and I think of course Flexecharge at the same time at the moment is exactly there. So the potential to go forward, and of course that's why we wanted to double down on the company. So do further on investments on it in this current round.
Very clear, yeah. So from a seed/early stage investor's perspective, how are emerging themes in EV charging influencing your investments these days?
So I think EV charging or e-mobility as a whole is super interesting right now. So I think there was a little bit of hype earlier. Now I think we are past the hype. We are actually in the real execution type. The number of EVs starts to grow. The number of the business becomes real, and the scaling potential is there. So we see that, of course, like raising in multiple layers in different parts, which of course provide the opportunities for startups to bring solutions for. So of course the whole energy flexibility market, then also the information about the different locations, so locational intelligence, where the charging points should be and why they should be there, fleet management solutions for EV fleets, for example, looking at solutions on, as we talk about, vehicle to grid. So basically we are facing the fact that soon we have huge number of batteries on wheels, and how do we use that for the advantage of the whole energy transformation. So there are, of course, opportunities. And then, of course, things related to the assistance and support of the charging network as a whole. So maintenance of that, also the quality of those the networks, how to improve it further. So, and payments, so also the payment methods, even though it should be straightforward, but there are still areas to further improve there. So I think we see lots of areas. My hypothesis is that we start to see the same what happened in the telecoms. So thinking of this like horizontalization of the EV network. So we've had these vertical solutions. Those were the early ones because you needed the full solution back end to end to the customer. But now when we start to get into further maturity on the industry, I believe, at least that's my hypothesis, to kind of look at the horizontalization of the software stack, if you may, and that of course provides opportunity for different types of startups to kind of take certain niche and be the number one in the world on that area. Absolutely. But as such, the whole market is still very nascent. So that means that there are, of course, you need to constantly watch out and make sure that you're relevant for the customers and provide those solutions, build the partnership so that you can take the control points which are necessary to win big. But then on the other hand, it is a fantastic opportunity, of course, to ride on the wave, which is having the positive tailwinds on, and so that even the small company has the structural capabilities to become the biggest in this ecosystem. And then when the whole market is growing so rapidly, to be able to take the global one position.
Yeah, absolutely. Yeah, it's just the beginning. Yeah, absolutely. Couldn't agree more with you with this specialization and niche that will become huge and absolutely difficult for players who want to do everything. The full integration, as you said, to keep on being excellent at all the parts of the experience.
Exactly.
Yeah. So. As the company welcomes new strategic investors, so what synergies are you most excited about seeing unfold with NBW New Ventures and Eco Ventures?
What I'm most happy about is their substance matter expertise. So they truly, this is a relatively complex area, what Flexecharge is dealing, and a few people are really experts on that area, and they totally are, both of them. So given their background and where they come from, they have the kind of overview on the, you could say, customer side of things. So understanding what it takes and what is really needed, and then understanding deeply enough the role what Flexecharge is playing this whole is something, of course, it's a good testimony of the possibilities of adding value to the customer segment you're working on.
No, absolutely, yeah. Great. Thank you very much. To round off, again, I was personally also at some point in my career, eyeing this possibility, being fascinated by startups and ventures and so on, and had some interviews with the VC fund, and it didn't pan out, and here I am and happy, but I'm sometimes thinking about it, and I'm sure I'm not the only one thinking. So any good advice for those who are maybe dreaming of joining a VC or, God knows, building their own VC shop down the line? What would you say to them?
I think you did exactly that. So I think being a good VC, you can come from very different perspectives. So in Europe, you traditionally seen people from like a strategic consultancy or investment banking, but increasingly so coming from you could say operative background. So being a founder, being in the early startups and helping it to grow, so that you've actually seen what the good looks like, and then being able to kind of not just theoretically advise startups, but be able to share some of the learnings. I strongly believe in, as I said already, I think because that kind of a experience of what it really takes to get the sales done, or what it really takes to build scalable products, what kind of issues they are, how do you overcome those. Of course, the technology itself develops very, very rapidly all the time, but kind of having that kind of ingrained understanding of what it is like to build a startup and growth company is really, really valuable. So, and then also, what is your edge? So, what you bring. So having something where you are the best in the world. So kind of like, I know this, or I look at that. So there are so many different types of how VCs are being done. So some are very network driven, some are very numbers driven, some are very tech driven, some are building out the platform to help the founders with different kinds of tools. So like having that kind of what you can bring, which adds value to help building, finding out and picking, and then especially hopefully helping up also adding value to the startups in their growth path.
Yeah. Thank you for those good piece of advice. And on that note, Terhi, Vapola, thank you very much for your time, and wishing you a great afternoon. Thank you very much.
Thank you so much.
Bye-bye.
Ciao.
Before we continue with the show, let me tell you about one of our latest free webinars that could save your next EV rollout. Grid regulations in Germany, Austria and Switzerland are tough, and one wrong move can cost you time and money. Learn how to stay compliant and roll out faster. Sign up now on flexecharge.com. And now, back to the show. All right, moving on to the third conversation in this episode about venture capital and e-mobility and EV charging with Nordic Alpha partner and the presence of the co-founder, Laurits. Welcome. Thank you very much for taking the time.
Thanks for inviting me.
All right, so let's start as always with all my guests. Can you please give a bit of your backstory? So where did you start your career so people can understand where you come from?
Yeah, so the 20 years prior to establishing Nordic Alpha Partners, I have been doing startups, corporate spin-outs, corporate turnarounds, dealing a lot in the green tech investment space around private equity, but always in super turbulent waters. And that was also the whole foundation of Nordic Alpha Partners. There were clearly no investors that had the appetite to deal with very complex, transformative hard tech in the growth phase, which more or less represents anything within the mobility transformation that's hard tech, but also anything that is tied down to the green tech transformation. So the 20 years prior, I've been doing this always at the end of the table. And the whole idea of Nordic Alpha was to do this in a larger scale, actually come in way more methodic, way more operational, and then really fix this huge gap that you have globally in the investment community post-VC, pre-buyout. That gap is still a huge gap. I don't think there's more than 4 to 5 funds in Europe that still has the appetite to invest in there. And we are the first one that dedicated fully into hard tech investments in the green tech space.
Yeah, so when we were preparing the episode, you were saying, well, you can call us a VC, but I will correct you. So please correct me. So you don't call yourself VC. Can you please elaborate?
We don't like the whole VC logic, the kind of 1 out of 10 model. We believe that all our assets should succeed. We invest quite early for being a growth fund, but we consider ourselves a growth fund. But our model doesn't allow either for the failure rate of venture, because we work so much more intensively with our asset versus what you see in the VC space. So we had 20 people at Nordic Alpha. We raised one more fund last year, 266 million. In total, we have channeled more than €1 billion into green tech investments in the Euro space. We're very good at getting acceleration, gearing capital into our assets. Our model, being 20 employees, 2/3 of those work within operational value creation. Also at senior partner level, the majority of partners in Nordic Alpha has a title that doesn't exist in other funds, which is called value creation partner. The whole idea is that allows us to be in the data stream of our assets. We would typically work with our assets 3 to 6 to sometimes 9 months prior. We always build a full-blown strategy all the way to multiple exit inflection points, pre-investing. The model also allows us to set up multiple strategies at the same time. We've done quite some successful investments within the mobility space, actually working on different strategies. But our assets grow so fast that if you're not in that data stream, if you're sitting in a boardroom, you would simply not be able to both risk mitigate, but also not utilize the huge opportunities you have when you're dealing in large transformations. So the whole model of Nordic Alpha, even though we like to go into early assets, is that it's a growth mentality. We want to succeed with all assets. And we are the final last investor, which means we don't like the alphabet approach either. I don't care about if it's A, B, C, whatever. We are the last investor. So when you bring us in, we will do the exit and we front the exit ourselves.
All right. Super interesting. Yeah. Thank you for sharing that. So how many assets do you work at the same time with your 20 people, just to get an idea of the intensity?
Yeah, so it's like buyout. So a fund of 266 million will do 11, 12 investments. But as you can imagine, it's quite intense, which means that the ratio of involvement is at a completely different scale. I think in the intro, I gave you an example, Spirii, that we exited last year. Here we actually owned it only 11 quarters, scaled it 2,600% over those 11 quarters, took it to 19 countries. And in closing dinner, I did an analysis of my inbox over those 11 quarters, and I had sent and received 10,470 emails over 11 quarters. And you can imagine if that is the kind of ratio you have of involvement with your asset, it's definitely beyond a quarterly board meeting.
Are you guys sleeping sometime at the assets office or what? I'm just curious.
Oh, for sure, so very intense. And the thing is, if these assets, when in mobility is a fantastic transformation. We really like to invest inside of that. Things are moving so damn fast. And what you see in the big transformations, people have this understanding that transformations accelerate linear. That's not at all. They actually do in waves. And you'll have very different technology asset winning the different waves within a transformation. And even though Spirii was, we had the asset for 11 quarters, we did 3 full-blown strategy processes because we actually saw proof points on some of the strategies that we set up with the founders and management team pre-investment that they actually accelerated incredibly fast. So we needed to redirect capital away from the core business also these assets. And in order to do that, you need to do really revamps of that strategy to ensure that you still maintain capital efficient scaling. So yes, we are quite close to the asset. The intent is not to review them or be in their face. We're there to value create. And I think if you ask the founders of these assets, they will see that we're in their face in order to help them scale faster with less risk.
Yeah. And does it mean that you evolve the kind of the profiles of the 20 employees you have or the value creators? I mean, do you kind of fill the gaps when you feel like, okay, we need somebody who's really good at this or that? How do you build the team?
Just internally, the value creation partners, we're 3 value creation partners at Nordic Alpha, but we do have a lot of supporting capacity. So you'd have full-blown ESG and regulatory. So working within e-mobility, you need regulatory expertise. This is typically not something that the assets have, at least in the early phases. You need finance system and finance infrastructure capabilities. You need debt financing. And financial gearing capabilities. You need HR, SWOT, and cultural transformation. Our assets would typically go from anything from 10 to 15 to 150 within the first 2 to 3 years. And that means you're going through 3 cultural acceleration, cultural phases. And if you're not front-loaded on that, you're simply going to become very, very inefficient. So those are all capacities. We have a running M&A program. So we M&A assets from pre-investment, which means that's an ongoing program that start even before we invest. We have dedicated M&A advisors. We do front the M&A process ourselves, but they work with us all the way to the end, help coordinating, help actually setting up these M&A structures.
Yeah.
And then, so these are all capacities that we have inside the fund. So the large majority of the 20 people are actually working, filling gaps of capabilities. Obviously, as the assets scale and they become 100 and 150 people, these capacities are not needed anymore because you would have those capabilities inside the fund.
You build them.
But in the early phases, actually us coming in, being able to be inside and support these things is such a huge benefit for our asset.
And you front load the skills before they get on board. You come with them. Yeah, absolutely. Very interesting. Okay, so let's talk a bit about the sector trends and investment appetite. So what segments of the broader e-mobility or energy tech landscape are you most excited about right now? Where do you see the next wave of growth?
Yeah, so it's quite clear. So again, looking at the transformation is that we saw this very early, and I'm so surprised how people don't understand like the transformative dynamics of a transformation. So it's clearly that the hard tech space is dead on the chargers. This commoditized. I think I spoke to head of mobility at Amazon asking about if they're going to move into hard tech or into chargers, and she said to me, we're not going to move into a space where a Chinese person in a garage is a competitor. And so this was very evident for us that the whole hard tech, as these things commoditize, it just becomes a bloodbath. The same thing is for CPOs and for the turnkey capabilities out there. What you often see in big transformations is that the turnkey capability, the ability to put things together, actually in the early phase is very valuable because it's difficult. But as these things commoditize, as they become easy, as even the corporates know how to do it, the value of that goes to zero. Which is also why if you look at a company like Spirii, which we exited, the whole turnkey approach that they had, we loved that because they were really, really strong in that first phase. I think the first year of tenders I think they won 76% of all tenders they participated in, because they're really good at that. But eventually we knew that would commoditize, which is why we spun out together with the management team a software business out of that, because we knew the winners of the second wave would not be the turnkey, it wouldn't be the hardware, it would be the platform. And if you can become a platform alongside these things, that the value extraction for that is 1,000-fold on what you could do on a hard tech transition. So right now, we're actually very concerned about the commoditized part of the hard tech side. We really like the software side a lot, but we don't like to be a software investor. So we like the idea of hybrid investments where you have a hard tech enabled, software enabled element inside of it. And the reason for that is that means you're keeping out all the North American investors because they don't like any hard tech.
That's right.
So they like the pure play software, and we're so strong at hard tech and hard tech value chains. But if you can get the combination of platform, value extraction from software, but you have like a Trojan horse kind of capability on the hard tech side, that's just a magic potion for us.
Yep.
So that's just purely dynamics. If you then look at the transformation as such, right now you have more that are willing to offer commoditized turnkey offerings than you have market. And of course, that becomes a bloodbath. And you're going to see a big consolidation, and you're going to see InfraCap move into this. We thought about doing moves in that. We've had multiple dialogues. But it's also a big boys game. You need a lot of money. You need a potential big J-curve to get like the huge economies of scale out of actually integrating all these CPO businesses. So I don't think we're going to stay in that area and try to go on such a journey. However, there are going to be subsectors within that's going to explode right now. So alongside all cities, especially in Europe, but you're going to see this globally, you're going to have these depots that are going to come out. And the companies that are specialized in that regional setups are going to have very, very prosperous days ahead of them, because that's going to put a completely different strain onto the e-mobility grid. Because previous, it was pretty commercially driven by privates, but as you move this into real trucks that needs to go into cities, that needs to deliver things, we're talking large-scale depots. And there's a lot of very fascinating technologies that will drive on that demand, both on the software and hardware side, but also key components that will fuel that on BESS systems, on PV systems, things that will really drive that complete reindustrialization of the logistical grid in Europe.
Absolutely, yeah. Exciting perspective. Couldn't agree more on this one, yeah. Tell me, so what's your take on demand-side flexibility, battery integration, smart charging hype, real investable opportunities today? How do you see it?
The one who owns the customer owns the world. I learned that at a very young age. Everybody believes that they will get access to all these value elements, but whoever owns the customer owns the world. So I think this is going to be the winners of that is the one that actually can dictate. We have an asset called Stable in our Fund 2 investment, which is doing probably the most advanced BESS system because of the leading inverter technology on the planet, no doubt about that. And of course, we're looking at how can we actually go onto BESS system that can participate in all these flexibility services and these elements. We're also looking at software assets that are able to do these things. But it comes down to who can actually facilitate that transaction, who will be the leader on that. And I think a lot of people will claim they get access to that and they can ride on this wave, but essentially that's going to be up to who owns the customer. So I think it's exciting. I think this is something, as the energy grid in Europe is going to evolve, it's going to be an increase in demand as we electrify, as we reindustrialize Europe. But the winners will be the one that are actually be in the front of that transformation in order to really value extract from these services.
Mm-hmm. Yeah, I hear you. All right, let's touch a bit on the market dynamics and a bit of advice for entrepreneurs who are also part of our audience. So given current macro conditions, has your investment appetite in energy tech, e-mobility shifted in the past year? Are you being more selective, or is this a time to double down? How do you place it?
And it's funny, I do a lot of presentations around the world, and people like a green tech investor, isn't that dead? And what people are not realizing is that it's probably the biggest transformation in the world right now. We need to reindustrialize the whole world, especially in Europe. And that is a whopping 215 trillion euros of investment globally, 50 trillion euros alone in Europe as we reindustrialize, which means essentially what started in the 1870s with the second industrial revolution and took like 150 years to what we have today, we need to completely revamp. Right now, we're financing a war against ourselves because we do not have a self-sufficient energy grid in Europe. It's critical. And I think this is actually the biggest benefit for net zero because the reindustrialization of the world is actually going to drive a security policy element. And not only we want to do better. So I believe that we're doubling down, especially on energy tech. Big time, and you're going to see a lot of money floating into this. We see up to 500 assets right now. I think our position is so strong. I don't think there's anything we don't see. We can choose very diligently what we want to invest into. I think what we're looking at is capital efficiency. We're concerned about too ambitious plans that have too big J-curves.
Yes.
The other thing, what we don't like is regulatory dependencies. We've set up a frame called hypertransformation. This was done with North American Ivy League school and leading universities in Denmark. The whole idea of hypertransformation is to dictate the 4 phases to drive reindustrialization. And here it's very evident, one of those being 2 externalities, one being like the whole tech adoption of new energy tech into value chains. But the other thing is really the policy and the geopolitical impacts and dependencies on third-party technologies. And we're staying away from that area right now because EU is going to come out with a lot of things. We're quite close to many of the dialogues down there, many of the new ideas and concepts are coming out to you. But still, we need to remember that when it comes to the energy grid, it's sovereign state. It's not an EU federal budget.
Right.
And the North American federal budget is 32 times larger than Europe, which means that EU has to come out regulatory pushes or maybe subsidized pushes, but essentially they cannot dictate the energy grid. And that creates these massive mismatches, like hydrogen value chains being like 3 years delayed, Denmark versus Germany.
Yes.
This would never happen in the US, would never happen in China. China's, by the way, federal budget is estimated to be larger than the US, which is why they successfully reindustrialized China faster than anyone on the planet.
Obviously.
And they're leading almost all green sectors. Well, actually all green sectors except advanced materials there, and they're now by far leading. So the whole idea is to double down on this, but be super aware that one thing is what EU says, another thing what they're actually able to implement. Those are 2 different things. And we made mistakes based on what came out from von der Leyen, believing that she's going to change things. And then essentially it turns out that the delay across borders is longer. And when you're sitting with a tech asset that's super dependent on new value chains or interoperability between borders, it's just a huge problem as an investor because suddenly your market is not there, you get delayed in investment. And remember, we are a growth investor, so this is super impactful on our investment strategy. So we're trying to stay away from those things and find the pockets that are not dependent or the pockets where you actually have seen the transformation and the value chains established. And this is where e-mobility is actually very far positive on our list because this is a transformation that is happening. You have many contenders in there, you have many buyers in there, you have a lot of money floating into this, and you're kind of establishing an infrastructure that gives you some kind of safe understanding that if you take out leading tech assets within this space, then you actually have a value chain that's established for you to execute into.
Yeah, you don't fear any major regulatory hurdles for e-mobility, right? I don't see any. I think it's all, there's no headwind. It's all tailwind, I think, from the policymakers, right? Do you see anything that worries you a little bit?
Yeah, so first of all, I never understood why they think this is a private market. Why is electrical energy infrastructure for EV not public in Europe? Like in China, they just set up a regulatory demand. You want to set up a building, you need to put up 2 superchargers. Boom, best infrastructure on the planet. They use very basic things like that. The problem is you cannot do this at the same pace. I would think that EU is going to come out with more positive elements, but I would still be concerned if you're a young leading asset, because what we still see is like a good example with Stable again. We're the only asset that can take old batteries and then set up a new BESS system based on reused batteries from others that outperforms a new BESS from China.
Oh, wow.
Better efficiency, better uptime, better cycles, everything. And it's completely unique. But the regulatory demands on used batteries now is the documentation, things like that, because it's becoming so complex that we're probably going to move off that market because it's just a chaos for us to do this. Luckily, the EV industry in Europe bought too many batteries, so we get the reuse batteries that we can use because there's still a huge surplus of batteries in that category. So our strategy is intact. But it's a little sad that we cannot take used lithium batteries and actually build BESS and then stabilizing the energy grid in Europe based on a waste stream. We can't do that because of the regulatory challenges from EU. And it's a very classical example. You have a pioneering technology, clearly leading, very valuable for self-sufficiency, circulating both waste streams and actually they stabilizing the energy grid in Europe. And then regulatory elements comes in and it makes it super complex. So I would be super aware for investors if you look at things where you have uncertainty, what's coming out on the regulatory side.
Yeah. Absolutely, yeah. So maybe a final question, because you're a busy man and we're running out of time. So finally, what's one maybe emerging trend in energy transition investing that you think maybe isn't getting enough attention yet?
I think a lot of them not getting a lot of attention. What is that? I think it's very difficult to say single out. We look at all kinds of components across the grid. So I think it's very difficult to say. I think just out, and I'm answering outside it, I think a technology area which is puzzling me, which has nothing to do with energy tech, is 3D printing. I simply don't understand why there are not larger demand for that. The whole self-sufficiency, what we can do on 3D printing, the role of Europe as a pioneering continent on 3D printing, and how many parts we could take away from producing in China and these things. So that's something that's puzzling. We're heavily invested into this, and we have a global leading asset within this area, but still becoming a niche industry. So within energy, I think actually you're good. There's so many interesting happens. I think what I would just tell investors and also tell companies, be careful. A transformation not linear. You'll have winners, and if your capabilities are hardware based, and you're going to see commoditization or dropping hardware curves, get out, because it's going to become a bloodbath because there's so much money floating in there.
Absolutely.
So really be very diligent on where you are in the transformational cycles, but also understand as you go to the platform play. Well, there's only 2 platforms for most cell phones. That's iOS and that's Google. So Android. It's going to be the same. You're going to have a consolidation also on the platform play. And here, the number of customers are going to count, and the central and the strategic capabilities you have. So think a lot about land grabbing, get the big accounts. This is what we changed on strategy of Spirii. Really just go for the big accounts, because they're going to make one strategic choice once. When you win Amazon, if you win Total, you win them once, and then you have that full out.
Yeah,
so really go down and look at the winners, and just be aware, the customers that call you might not be the best customer on the planet. It's the customers that didn't call you.
That didn't call you. You have to chase. Yeah. Thanks a lot, Laurits, on those words. Thank you very much for your time. Pleasure. We could talk for a long time. Wishing you a great day, and we'll be in touch. Thank you very much.
And good luck on the endeavors out there in the market.
Thank you. Bye.
Bye-bye.
And that wraps up this episode of the ChargePoint podcast. What did we learn? Well, from Thomas at Vireo Ventures, we heard how real opportunity lives at the intersection of energy and mobility, and why early traction and team execution are what turned a thesis into a commitment. Terhi from Greencode Ventures brought a sharp focus on impact, urging founders to combine scalable business models with tangible environmental outcomes. Speed and clarity, she reminded us, are non-negotiable. And Laurits from Nordic Alpha Partners gave us a behind-the-scenes look at what it means to truly partner for growth, from strategy sprints to scaling playbooks, like they did with Spirii, one of the fastest-growing backend in the industry. These perspectives highlight what really matters in this space, not just vision, but alignment on mission, markets, and execution. If you enjoyed this conversation, share it with a fellow founder, investor, or anyone passionate about the future of EV infrastructure. And if you're listening on Apple Podcasts or Spotify, please take a second to give us a 5-star rating, or even better, leave a quick review. It helps more people discover the show and join the conversation. Thanks for tuning in, and until next time, stay smart and stay charged. Bye.